All right, let's get into this Monday recap here and take a look at some price action and check out the day that we had today. You can see that we do have our weekly mid-range here, and then we have our high up here and our low, which we talked about on the last recap over the weekend as we wrapped up into Sunday and looked at that price action. Now you can see this nice wick right here, a lot of volume sucking this up through these key levels that we're looking at, which is a strong key level down here, about 115.7. We do have some bigger levels. If you look to the 4 hour, it could even be down around that 110 to 111,000. So that's still kind of sitting around on the table, if you will. But let's go ahead and look at today real quick and just make this a little bit shorter and just mainly just look at price action, not so much on anything more than that. So the Kabroda Trading Battle Box gave us our key levels for today. Here's your breakdown trigger, your breakout trigger, your 30-minute range from the first half hour of the morning. And then you had your daily resistance and daily support here on the red and the blue line. So one thing you always want to do is kind of look at the price action, and what kind of happened and what are we leading up to. So I can see that we came in from yesterday morning and traded down and then started to work our way back up through Sunday night into early Monday morning. And that's why I circled this because it actually touched this key level on the weekly mid-range point. Now, if we're going to break up through here, we should have actually started to flag out, opened up the session in the morning and saw this breakout. The reason why I marked this area is because we came up and made a higher high here, and then we traded down into the morning. We came all the way back down to the weekly point of control, and then of course once we got our key levels, we were watching for what's going to happen, right? You're looking for a breakout or a breakdown. So we came up and we actually started to see this break out, and it started to show that it wanted to run. Now, if you're just looking at volume, you can see the volume actually spiked up through the breakout area. So that's great. If you were just looking at this right here and you blocked all this price action and you were just analyzing what's going forward, you would have said, hey, this is going to break up, pull back, and continue on. But you did have this high back here, and that was basically saying, here's your high, here's your lower high, and we're rejecting right here in a key area in the morning, and then we traded back down very quickly, and we're looking for this to break down. And if I go into my 5-minute here, this is a lot more clear. So here's kind of your flat top right through here in the morning. So you had your high, your lower high, and then we also lost the 21 right here. We started to come back through here, and from myself, my rule is it has to break through the 200 on the 5-minute. So I'm waiting for this to happen right through here. It started to play out. So we were bleeding down from this main level because it was a lower high. This was definitely going to go and start to take out the lower areas. So you can see that I did take this trade right here. I already have a mark. I traded down. Now you might be asking yourself, why did you take this at this dotted line? And this is the breakdown trigger. So this would have been my first area to watch for on the breakdown. The reason why I circled these areas, I wanted to point these out for you. We had volume spikes right here. It took out the last 4 to 6 candles by at least double in movement in the candle. And you can see though that we rejected and started to come back up on that volume push down right through here. So these 3 5-minute candles, this 15-minute candle, we came down. We didn't quite touch this area, and we started to come back up. Now, typically what you see is this is the lower low here. A lot of times you'll see it make another lower low. So if you're in a trade and you basically see what's happening right here, a lot of times this is going to be your exit. So if I was saying, hey, I'm going to see this go all the way down here, I'm going to ride this out. Once I saw this candle, I would have been saying, hey, you know what, I'm going to move up my stop and take this out here. Now, obviously you can make more money down here, but if you never come down and hit this, then obviously you don't make it. You don't make anything. You have to take your money off the markets when you get paid, not watching the market go up and down and your account go up and down to you and never taking it off. The reason why, because you knew this was going to bounce here based on this, the more like this isn't going to continue on through. And you can see how this rejected off of here and came right back up, took off the 21. So my rule would have been to exit here. That's why I'm pointing this out, is because you could have called the perfect bottom because it's telling you what that was going to happen. It's going to bounce in support. Very, very strong indicators. So classic textbook style patterns that you want to look for. You can see we bounced, came back up. Now we started to go up. Now this could have started to rebuild and go on up and test the 200. Could even go up and test this upper area and reject all this and then just keep going on you. That's why you get out. Your edge was the breakdown here. Once it confirmed that it was burning and exhausting out, it's time to go ahead and take your trade off. Don't sit there and try to hope and dream that the market's going to go further. The edge was taken away from you right here, and then you took out the lowest of the low, and that was it. Now, the one thing I would watch for is if this starts to go back up through, like you saw right here, I would have went ahead and took it off here for sure, but this is where I would have put my stop, my take profit. So you can see this started to play back out and break back down. Now this, I would not have gotten in early right here. The reason why is because this could have easily came down flat through here like this, broke down, and then took off. So then you would have had a left shoulder, a head, and a right shoulder right there, and off to the races it goes. And you don't want to jump on a trade right here. You need to have this confirm itself out. So you can see once it took out this area right here, so that's where I got back in to this next trade. Once it was confirmed, use this area as my stop, each your own, if you will. And then I already knew that we created the exact same pattern again. You can see the volume kicked up right here. We did start to break down, so I knew we were going to go down and test the next key area, which was a bigger pattern that this could have played out to. So you can see we actually hit that area, and then we started to trade up. You can see again how we got it back above the 21. The 21 started to show support here, and we started to build. Now we weren't above the 200. That's why I'm not taking longs in this. I need to wait for it to get back above the 200. And you can see that even though we were getting back above the 21, it's very sideways and choppy. Now this did come back down and hit this key area again, and then you saw this volume spike. And it did not give it to you if you were looking for this to be your exit. It never got down that low. It just kind of stopped here in 116,000 level basically, and then just wicked right back up to the same area. Again, if you were out of the market, you just don't have to worry about it. You got your money out way back here. In my case, it would have been 3 o'clock in the afternoon, and you wouldn't have been worried about the change in the market, which would be right here, and then have this fall out and then just bounce right back up. Now you can see it's testing the 200 again. We're back above the 21 right now. To me, you're in 50-50. It could go bullish, it could go bearish. We need to see this break back down and test this and roll back over, just like we saw it do here, or have this break back up and get above this 200 moving average, just like we saw back here when it went bearish. It'd go back bullish. So that's basically all you're doing in price action. It's very simple, easy to read, straightforward. That's why I'm pointing this out for the day. So those were your opportunities in the market. You can see the market didn't really move that far overall. Now I will jump out, I guess, real quick, and we do have this pattern kind of sitting in the 4-hour, this key area right here, and then we do have this pattern right here. Now this could trade in here and break down. If it does take us down to around that level I was talking about, which we'll have to watch. You do have kind of a support line right down through this area, pretty much 111.5 down to about 110,000. We'll just kind of have to watch to see how things play out from here. Now this could just continue to build support through here and then break back up, and then we'll go that route. We'll just have to watch. So anyway, that's about it, guys. Just going through some price action using our key levels from our daily market review that was built off of the Kabroda Trading Battle Box, and how the key levels, I just showed you how they all played out and helped you take advantage of price action. That is the secret. It's not telling you how to trade, it's just helping you trade. So you still have to be a trader and teach yourself how to actually analyze this price action. But you do have a very powerful tool on your side, which is kind of like having a professional trader, like someone like myself sitting here helping you out, just like I just ran through price action. That's what I was trying to do, is helping you look for opportunity in the market. So you guys have a great rest of the day, and we'll be seeing you in the next recap. Thanks, guys. Talk to you soon.